Hi, everybody. Welcome back to another episode of Beyond the Breakpoint. We are blessed to be joined in studio with none other than Dinesh, our friend Dinesh. And I always ruin your last name every time I try to say it. Can you please say it for me so I don't butcher it?
It's Achria.
Atria.
Achria, yes.
See, I was going to say Atria, but it's Atria. Dinesh Atria.
At
Uh,
least you didn't call me Denise. I've even been
no,
called that, okay? So,
Dinesh. I got that correct.
yeah.
Uh, that's
Good to see
awesome. Well,
you,
Dinesh,
Matthew.
listen, thank you so much for joining us. We're blessed to have you here. A wealth of experience and knowledge with this gentleman. So, folks, you're going to have a wonderful time with Dinesh today, hearing a little bit more about what the horror show is and what the pitfalls are, and what you can do to navigate these things within our commercial real estate lending world. So, I'll get into it with Dinesh. With over 25 years of experience, as I mentioned earlier, in the financial services industry. Dinesh is a partner at Foundry Mortgage Capital, which is a boutique commercial mortgage brokerage here in Toronto, Ontario. He specializes in delivering capital solutions for large scale transactions across Canada. He focuses on both real estate financing in all asset classes, if I didn't get that right, Dinesh,
Yes.
leveraging expertise in commercial mortgages negotiation, market insight. I think what's interesting though is, prior to Dinesh being in the mortgage brokerage world, which he went into in 2012, he was working with RBC, if I'm not mistaken.
RBC and UBS.
UBS, that's right. He was doing structuring mortgage investment products and other investment products as well, besides just
More so on the other investment products. There were a few debt related, but majority were more on the equity side. And
they were okay.
yeah, and there was more like launching products on the TSX.
Ah, there you go. A man who's familiar with the publicly traded stocks. Interesting.
Yeah.
So without further ado, ladies and gentlemen, we're going to welcome Dinesh to the show. Uh, Dinesh, tell them what you like to do outside of work in your own time, which is something I'm not going to tell them. That's from you.
Okay. Well, I'm a novice wine collector, so over the last few years, collected a few nice bottles. My collection has grown slowly.
Very nice.
And I like wines, especially I've been leaning a lot towards the Italian ones lately, so
Really?
the Amarones and the Barolos.
Very nice.
And it's kind of like I'm seeing my son now, who's a first year at university, picking up that habit at a very young age.
Universities where we get introduced to many things, Dinesh.
Yeah, exactly.
Might be one of them.
I don't know if it's a phase for him or what, but besides that, like when time permits and life, given how busy we are, I love traveling whenever I can
Yeah.
get an
Oh, I love
opportunity.
it too. Yeah. Yeah. We
I mean,
talked.
our last great vacation my wife and I had, we went to Greece for my 50th birthday.
Oh, nice.
And we didn't do like the crazy tourist thing of going to multiple cities. We were there for a week. We limited it to two cities and enjoyed the most in those two cities.
What did you go to Athens or where
We
did you
went to
go?
Athens and Santorini.
That's
And
really
we did not stay in the tourist part of Santorini. Like we did a lot of research. We stayed on the other end of the island, which is called the Black Beach, where it's all made up, like the sand is all volcanic sand, so
volcanic
it's a little
ash.
bit
Yeah.
more stony, but it was so peaceful and quiet compared to the tourist side of the island.
Yeah. Yeah.
Because
That's
when I want to
awesome.
go on a vacation, I look at like I need some peace.
Yeah.
We're in a mad world as it is.
Yeah. Leave the phone behind because trust me, it'll interrupt.
Yeah.
I know. I know. Well, thank you very much for being with us, Dinesh. For people who don't know you, what we wanted to get a bit of a sense is how does share a little bit about how your role at Foundry as a partner at Foundry fits into the overall picture of what Foundry is trying to achieve.
So I joined Foundry approximately 5 years ago, roundabout. But I knew the principles of the brokerage for since I started my career in real estate.
Oh wow.
And when I decided to join Foundry, I had been working for a large real estate private equity firm in Canada. that did cross-border financing both in US and Canada. So I got a lot of exposure to financing in the US too, and it's a different market out there.
Yeah, yeah, totally, totally.
So my first ever deal I did at that firm, I can tell you, was a Holiday Inn at the LaGuardia Airport.
Oh,
Finan
really? Oh my God.
Financing the purchase of that.
Wow, right in New York City, baby.
Yeah,
Yeah.
exactly. So, and you learn a lot of different nuances, and when you look at it to our marketplace, like, yeah, the US can be the Wild West at times.
Yes. Yeah, very much. Very true.
Uh,
So,
so in the last 5 years since I've been at Foundry, just to continue on onto your question is like everyone else, I joined as an agent, and somehow I don't know, maybe it was my interest or something that I kind of became the in-house CMHC guru.
oh, really?
Yeah, maybe I'm Indian, so the guru, I can't put that in guru title to that, like and through that, because I cut my teeth on doing a $65 million student housing loan through CMHC, which I don't know how I got it done, but
Yeah.
I must have learned a lot of things because after that, I kind of became the person who always was on top of CMHC correspondences, whatever is happening in that part of the world, and like a figure, like a resource to a lot of the younger guys at the firm,
Yeah.
as well as under the tutelage of Foundry's founder Murray, who's been in the business for over 40 years.
Wow.
Like he knew CMHC and he's seen it evolve in those 40 years.
Yeah, I bet. Yeah.
So like under his tutelage, like I kind of became the in-house expert on CMHC.
Well, very serendipitous for you with what's going on right now with the MLI Select and ACLP programs, right? So
Yes.
you're the it guy right now, I'll tell you that, which is great.
Yeah.
Which actually is a great segue into my next question for you.
Hmm.
So, given that you are the go-to guy right now in the MLI Select or CMHC space right now, and looking at how Toronto is pivoting right now from condo to everything being purposeful rental, we had that conversation. Um, what does a typical day look like for Dinesh?
A typical day is trying to figure out what rule has CMHC changed now.
Oh my God, we laugh because we know it's so true. It's a moving goalpost. It really is.
Like, I mean, there is so much gray. There's no black or white.
Yeah,
There are certain things that are black and white, yes, the fees, the premiums, and all that. But in between that, there is so much gray that you sometimes you're questioning yourself even after knowing the answers.
yeah, yeah. It's very hard to underwrite things when it's just continually uh,
Yeah.
changing by the week, you know.
Like yesterday, I was at a real estate series um, put on by one of the lenders, and I'm just looking. They were talking all about this new the middle housing and the design catalog CMHC put out. I said, okay, this is great, but how can you conform every project to a single design, you know? You might have, okay, they had different iterations, like this is for a town plus laneway or, but again, it's, you can't have cookie cutter solutions because it has to be specific to a project. But the biggest thing of all that, of the design thing was, okay, you've got this design, great, it's a great starting point, but which lending program can my client apply under? Because if we look at it under MLI Select, if you try to bring in affordability in a sixplex, it just ruins everything.
It doesn't work. Yeah,
It
yeah,
doesn't work.
yeah.
So, I mean, it's like if you're doing this, do it like, okay, we've launched this design program. You follow the design program, then you can follow this lending program, It has to be something that should be more streamlined.
Right. Yeah. No, I totally agree with you. And I think it's interesting because when they try to give that cookie cutter thing, be it through policy, we see what happens, right?
Yes.
You know, when you talk about affordability and it's 30% of someone's take home income, well, someone's take home income in Newfoundland might vary greatly from someone's take home income in Forest Hill, Toronto. 30% is not 30%, is not 30%, is not 30%. So how do you make a policy en masse apply to everyone? And that's, I think, one of the problems we're having, right?
And the problem goes to the data that they have is like we're still following the affordability calculations of 2019,
Yeah,
and we're
it's a good,
we're on the cusp of 2026.
yeah,
I
yeah,
mean, COVID's long gone in the rearview mirror.
yeah. No, you're not wrong. You're not wrong. So dated data and sweeping policies don't work because real
No,
estate really is very local, isn't it?
yes,
It really is.
yeah,
I think that's one of the challenges, and it's great to have somebody like you, who's nimble enough to be able to navigate those gray spaces because that's really difficult, I think, within our market segment right now.
and the most important thing in being on this side of the business and doing this with clients is also educating the clients. Like every client comes and thinks they're going to get that 95% in MLI Select. It's not the case.
Yeah,
So what my day is spent is, okay, what is the policies out there? How do I decipher them? Then how do I educate the client and say you're not going to get 95% because you got to look at LTV, you got to look at LTC, you got to look at DSC, take them through the whole thing. So for every client, when I work with the best solution to make things easier is I tell a client, send me your numbers that you have put together with your team. Let me run it through my models to tell you what your loan would look like at a high level before you go spend dollars on hiring, doing studies and getting everything going to know what you're really going to get, you know? So
yeah,
it's to provide you more a high level scenario.
right. No, that's great. So I guess that would lead into my next question, which might the question might speak more to the actual brokerage operations itself.
Hmm.
And given your seniority in the industry, I think you could opine on this. I
Sure.
would imagine, Dinesh, what major shifts or trends are you seeing in your industry right now?
Okay, so here's what I'm seeing, and this is my opinion from what I see on a day to day.
Sure.
There is a lot of money on the lending side, on the sidelines.
Hmm.
But overall, whether it be a conventional lender or a private lender, they are all a little bit more extra due diligent in how they're putting out their money. And it's even with when you're dealing on the private side of the business, the amount of due diligence has increased.
Yeah, I could see that.
So be it any asset class, like if we could do a deal in 3 months, now it's taking 4 to 5 months.
Wow.
So the time of the deal length in get from the start to finish has increased at least by like 30 to 40% the time.
That's significant. That
Yes,
sales cycle is significant. It's very difficult
yes,
because they got to underwrite that in terms of their costing and time, right? For funding.
yeah. Where we see lenders more on the conventional side, a lot more receptive is owner occupied real estate, businesses which have real estate with them.
Yeah.
Because what they have then is something substantial to see, okay, a business is performing, they have the real estate. It makes it easier for them to then finance to a higher leverage.
Industrial or office, maybe? Or
Industrial office is coming back gradually, but
yeah.
more like owner occupied. I'm doing one deal right now. It's in Scarborough. Really good business, amazing real estate, and was able to get a very high leverage loan, which combined a mortgage, a business line.
Yeah.
So it was a combination of a few things, you know?
Was that easier to push through for you, Dinesh, or did
Yes,
you
it was
jump through
easier
the
to push
hoops?
through for me. Yes.
Yeah. How long did that one take you? What was the cycle on that? 2 months?
6 weeks.
Huh, not bad. That's 6 weeks is really good.
And that's with a bank.
Schedule A?
Yeah, Schedule A bank.
Huh, interesting. So let me ask you, the increased time on the deal cycle now, how has that impacted your business growth or your strategy over at Foundry?
It's we are spending more time working, because one thing about Foundry, this I'll take a step back and say is we really invest ourselves with our clients. And what I mean by that is, as a brokerage, we are more of a white glove service where from start to finish, we are with the client. Like they like we are like their partners.
Got it.
Because if we can't get it done for them, then it's not a good thing, moving
Yeah.
forward. Because
Yeah.
it's that same client who is going to come back to us again and again and again. And like this, we have a few good relationships at the firm where they don't want to go to anyone else.
Yeah. No, I completely appreciate that.
It's a very relationship driven process where like we will give them contacts to consultants to like for appraisals, for energy efficiency or BCAs, and we keep it very above the how do you put it this way? Like we'll give them, like, for example, someone's looking for an appraiser. I'll send them three appraisers. I'll say, these are my three in this area. Speak to them yourselves and then decide.
Yeah.
Like I try to avoid that conflict of interest.
No, that's important. We're seeing a lot of that these days. So that makes a lot of sense. But I
Yeah.
guess what I'm looking at is from a business perspective, speaking as a principal, which you are,
Mhm.
and a partner, with these changes that MLI and CMHC has been making, which is frustrating the clients. I think we can both agree that the clientele has become frustrated
Right.
because the financial landscape is very treacherous and is changing every day.
Yes.
What has that done to your business in terms of your growth and your strategy at Foundry?
It has a little bit slowed down getting out there and meeting more clients
Yeah, I could get that.
because you're spending more time making sure what you have in your hopper is moving along,
Got it. Yeah. So it's not the 06, 07 glory days when there was no income, no job, approved, just get it out, pump it out.
Yeah.
There's a lot of due diligence to dot I's and cross T's now.
Because here is the thing, no matter how sophisticated a client may be, but sometimes a financial institution or a lender could ask a document from the left field. And you have to then explain to the client why they're asking for it,
Yeah. Yeah. So there's a lot more production of records and backup than
Yes.
there might have been. And even when it's seemingly over or when
Yes.
it's seemingly been satisfied, there's always another request for more.
And this goes back to how at Foundry work is like, we want to check, like when a client sends us something, we want to check it before we forward it to a lender, because if there is something that we can't understand, we'd rather ask the client right now before it goes to a lender and it gets more convoluted.
So you
Because don't forget, when a file goes to a lender, it goes to your originator, who then gives this to his underwriters. And you know how underwriters can be.
Yeah.
And I was an underwriter in a different lifetime, so I know.
I'll leave that there.
Yeah. And
I work with them, so I can't say anything.
I was an underwriter. That's how I started my career in real estate. So there you go. Because we're protecting the money that we're investing out there. So
agreed. Let's switch the gears a little bit, Dinesh, if you will. This is a little bit fun. Let's take a look at this. What I'd like to take a look at is Dinesh at Foundry. What seems to be that secret sauce that's working well for Dinesh and Foundry right now in this economy we're in? What is that? What's working well for you guys?
it goes back to our principles of open and honest communications.
Hmm.
There's no BSing a client. There's no BSing a lender. It's like one thing I credit myself, and sometimes people don't like it, is I'm straight to the point.
That's actually refreshing.
Because you want the deal done. Say you're my client, you want to know how to move this forward. And I run your numbers and I say, I'll poke some holes in it. And I'm telling this to you because this is what I'm seeing out there happening. But you don't like what I'm telling you, but then I'm doing you a favor rather than you going out there. I say, I don't want you as my broker. You go to someone else.
Yeah.
They go out there and you get inundated with those questions, and you get sour on your own deal. So that's what Foundry is really good at, is being transparent with their clients and their lenders when they're presenting a file.
So would you say that Foundry, would it be a fair statement to say, Dinesh, that Foundry goes maybe that extra step on its own underwriting before it goes to the lending community?
Yes. And even I will give you a totally different example to show you what we mean when we go the extra step.
Sure, please.
One of my earlier transactions, I'm now like 4 years ago, working with a lender who I have a very good standing with. The client had an issue, and I told the client it's best we discuss it with the lender. Obviously, by discussing it, it did put the client in a default situation, but the lender did not call the loan, and actually, because of our transparency, gave us 6 months to resolve the situation.
Ah, interesting. So the lender actually chose to work with you,
Yes,
remedy the situation rather than calling the loan and putting you into.
putting the client in default.
Yeah, yeah. Interesting. That's important because right now in this world, I think we're seeing that a lot. We're seeing a lot of
Exactly.
different, right? Yeah. So honesty is the best policy, I think, is what you're saying.
Yeah, open communications, like
If
jokingly, what we tell a client as brokers or agents is that we are your mortgage therapists. You may have other therapists, but we are your mortgage therapists. So whatever skeletons in regards to your mortgage is there, tell us.
tell us now because we're gonna find them out,
Yeah,
baby.
exactly.
Like being a politician, it all comes out in the wash. That's
Hmm.
so let me ask you this then. We've heard from Dinesh in what's working well for you guys and kind of getting out in front of it, which I appreciate. But what's the thing that, if you had to pick one thing only, Dinesh, what would be the one thing that seems to be frustrating you the most in your business right now?
I would say, um, and we're improving on this, given the changes with technology and everything.
Yeah,
Whole document collection process and putting the file together, that is tedious.
yeah,
And
yeah,
especially when you're looking at files which are more intricate, which have a lot of partnerships or holding companies involved in it. It just and because of that, like at Foundry, we have been working on our systems
okay,
and improving them with a new CRM system, which helps us collect the documents of the clients.
yeah,
And like any technology, it's something we're learning and getting better at.
yeah. I
And
totally
that
get
would
it.
even come into a point like where we are looking at ways AI can streamline our business so we can be more out there.
Yeah. Well, I mean, I think you would agree with me. I shouldn't say that. I'll take a step back. Okay, I'll
Sure.
say this for myself, having been through the mortgage process on a commercial side myself many times. I the broker only has so many hours in the day,
Yes.
and client origination, being in front of client facing, is extremely important because it's managing that client's expectations and explaining why there's a constant request for more documentation or whatever else it is. It's
Mm.
hard to do that when you're chasing documentation and you're doing all the administrative backup and follow up. It becomes a real struggle with your own calendar, I would imagine, to do that on top of your underwriting and everything else you have to do. So
Yes.
I do appreciate, Dinesh, where you're coming from on that end, having have my own intimate knowledge of your business. I'm not a mortgage broker. I'm not
Mm.
licensed to be one, but I've worked with enough of them in my 25 years to firsthand see what they have to go through. And having gotten my own mortgages, I understand that.
Yeah.
So which metrics, like if you were to take a look now in November of 2025 and say June of, because December is a lost month, let's be honest.
Yeah.
So let's say June of 2026. If there was some metrics you could see to improve, like Dinesh's life and getting Dinesh to be more client facing and doing what he does best, what would those metrics be?
Well, one, as we mentioned, is like we've incorporated a new CRM system
Yep.
and going through it. And now what I'm doing is I'm getting more active in using the tools with the CRM system, whereby it sends a link directly to the, like we put in all the client details, it sends a link directly to the client. We built checklists, and accordingly, we get those documents in straight to our Dropbox.
Yep.
It's not like I'm looking through 100 now emails coming from a client, because as you know, when you're doing a CMHC construction or any construction file, the checklist is a
Huge.
lot more than a regular refinance.
Oh yeah.
Yeah, so it's, and I'm thinking like the more we start using it as a group, I think besides myself, all of us will be out there more.
Listen, that's very encouraging.
It would be a good like 25 to 35% savings on our times.
That is that's not negligible. That's substantial.
That is substantial, because
Sure.
here's it. When you go out on a site visit, half a day is gone. And especially if you're going on a site, like I'm out in Richmond Hill. A lot
Yeah.
of my clients are on the west side, meaning west of Ontario, west of GTA.
Yeah.
So even if I get on the 407, the closest is going to Guelph. That's an hour. Hour there, meet with the clients. Sometimes you have lunch. By the
Yeah.
time you're back, 5 hours are already gone of the day.
Yep. You're not wrong. And you
Yeah,
got no traffic you got to traverse too. So good luck with that.
exactly. And yeah, and sometimes I'm like, the 407 is like, I think they love taking money from me.
Worst thing we ever did was sell that highway, Dinesh. Don't get me started on
Exactly.
that. Don't get me going on that.
Yeah.
So it's a great segue into looking at future goals for Dinesh. If we were to fix some of those things, where would Foundry, well, where would Dinesh and Foundry like to see themselves 6 to 12 months from now?
The good news is we've got our licenses now in BC and Alberta.
Oh,
So,
congratulations.
so
Yeah.
as such, we do cover majority of Canada, and we would like to, as even though most of us are based in Ontario,
Mhm.
we're 14 of us. We have one lone wolf in BC.
The Lost Wolf. Yeah.
Yeah, who we kicked out of Ontario to go to BC. So.
Yeah. He's your implant
Yeah, but in the sense that we would like to see expanding our business more
out
across
west.
the country.
Yeah. Yeah.
There are opportunities in different pockets, and I mean, hopefully, some of the stuff that the present government is doing on the infrastructure might create opportunities in those markets for
Yeah.
housing, or even industry or small industry, where we would fit in to arrange financing for.
No, makes total sense. Alberta is definitely a go-to place. I mean, I've been hearing
Yes,
a lot about Alberta for a while now, for good reason.
exactly.
So, um, you mentioned that you know, if you had, well, put it this way, you mentioned earlier that if there was a way to get everything automated to give you back that 33% of the time, if I were to give Dinesh a magic wand right now, and Dinesh could use one thing with that magic wand, would it be to wave it over CMHC, or would it be to wave it over your own business internally? Where would you use that wand to improve?
I would break that one in two and use half for my business and half for
Good one.
the.
Yeah, that's not a bad. Listen, um, I have to ask you a question, and this is maybe a little off topic, but have you and the partners, like, have you guys discussed this 50-year amortization that they're looking at in the US, and whether that's a good thing or a bad thing, or should it be brought to Canada for the residential homeowner?
Um, okay, 50 years might be a little extreme, given it becomes more of an equity mortgage,
Mm,
at least bring it to 40.
right.
At least bring it to 40 years.
So I guess the question I'm struggling with is we all know that on the commercial side of things,
Right.
with through CMHC, if you qualify, you can get up to a 50-year AM, which helps the developers bring down our carrying cost to build the asset and then get it refinanced once it's stabilized. So I understand how that 50-year AM works in that capacity. But for the regular average Joe who bought a house in 2021, can't really afford it now with the increased interest rates, has the mortgage coming due in 2026. Does the prospect of increasing the AM from 25 years to 50 years help these people not lose their homes, Dinesh?
Yes, it does. But but there will
I hear a
be,
but. I hear a but.
yes, because you do have, there has to be a little bit of an education on the to the client that you're going into this 50-year AM, your payments will come down for sure,
Right.
but don't forget you're paying more in interest and less in principal.
Correct.
So there has to be an education, and that's why, like, okay, I know banks somewhere are doing 30 years right now,
Yeah.
but maybe if we to a middle ground of 40, and I mean by 40 in general, even for commercial mortgages, if banks were to look at that, I think the pressure on CMHC with the deal flows would be a little less, and it'd be more on the banks to look at, like, okay, looking at multifamily at 40 years, we could make a lot more work with banks.
Right. So
Because right now,
more conventional, right?
yeah, because right now CMHC is the only game in town for these rental projects.
Correct.
Because banks are still limited to 25 years, and if the banks would increase their amortization to like 35 or 40 years, there are a lot of projects that would work.
I I fully agree with you, but correct me if I'm wrong. And I'm going to need I'm going to defer to your experience on this, Dinesh. That's a policy-driven decision, isn't it? Isn't the Feds set what the maximum amortization can be, so the banks only enforce what the Feds give
Yeah,
them?
so this has to come from the policy side. Again, OSFI has to make some changes
Correct.
because you're putting the and I'm not like trying to defend CMHC here, but you're putting a pressure on just one agency, and a lot is being left off the table of a lot of other projects that are going on
Yes. And
because
right
they
now we have a
they
housing crisis. We need those units, Dinesh.
exactly, like, we don't have, like, the bank doesn't have a program for the middle housing, like the 5 units. That would be an ideal one which should fit into a bank portfolio.
There's very little risk on that. I agree with you.
Yes,
Yeah, little exposure.
yes.
So I guess that brings me to my next question, which is kind of the burning question that everyone's talking about. And I apologize for leaving this to the end, Dinesh, but I
No
am
problem.
going to have to ask you, um, this idea of the 50-year AM, does it actually address affordability, or is it just a Band-Aid masking it?
It is a band-aid masking it.
I agree.
Because as it goes back to my earlier point, unless the client is not educated that they basically are only paying interest. It's an interest only mortgage with a very small sliver being going to principal.
Right. And you just defer that over double the amount of time.
Exactly.
So you'll end up having generational housing where, some people will die and pass it on to their kids who inherit a mortgage, right? Like that's,
Exactly.
yeah. So that doesn't actually address affordability,
No.
but what it does is it possibly helps stop a massive amount of power of sales and foreclosures and having a complete collapse.
Exactly.
Is that a fair statement or?
That's a fair statement. I think there are other components that will help address affordability, and that comes more onto the municipal level, the provincial level, and that's a topic for another day, I would guess. We could go onward on that for a
Yeah,
long,
well,
long
we're not
time.
going to discuss Canada Homes Corp in
Yeah.
Ohio. That's another conversation for.
Yeah, because CMHC is one conversation, then you come into all the other stuff.
Absolutely. Listen, Dinesh, this is I've already gone over time, and I apologize. I don't want to cut into your day.
No, no problem.
I could talk for hours with you on this stuff. You know that.
Yes.
So, Dinesh, let me ask you, for everybody viewing and everybody watching, how can they get a hold of you?
Very simple. I'm on LinkedIn. I'm pretty active. My email is there. I've not hidden my contacts. I do publish once in a while. I publish some white papers and or I comment on articles. So you'll always see me active there at least once a week or once in 10 days. You'll see something from me there. You can feel free to reach out there. And
Awesome.
one thing Foundry does really good is whenever we close a transaction, we post it on LinkedIn. And as a team, we all reshare it because we believe in the success of our whole team.
Yeah.
That's
How
what makes
many are there?
Foundry special.
How many do we have in Foundry now? Is it
We're 14.
14? Yeah.
Yes. As I said, one lone wolf in BC and 13 of us here.
Got it. Are there plans for Foundry to expand in Ontario, or are they just going out west?
Well, I think we have a good set of agents in Ontario to cover the market.
Yep.
And I think the expansion is going to be more, we're looking, let's see how things roll about in the new year with our person out in BC, how we're capturing Alberta, and then
Yeah.
accordingly because again, Alberta is such an economy, it's like commodity driven, and if you have
Yeah.
a commodity bad cycle, that economy then goes into
Yeah. 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 Get it. Totally get it.
yeah. So
Listen,
and the
Dinesh,
whole thing is like there's still a lot of uncertainty with our best friends across the border. So we need some certainty in that for the Canadian people to get more confident on our economy too. Because as such, Canada can do amazing things.
oh, I agree with you fully.
We have all the resources.
We should be the richest country in the planet. With our
Exactly.
resources, we should. I just think
Yeah.
that we've got a serious policy deficit, and I think we've got to really reimagine what governance looks like in this country and rediscover our resources and not be so Canadian where we have to apologize for having them and
Exactly.
embrace the fact that we have them and sell them to those who want to pay for them.
Exactly. Yeah. I mean, I totally agree with you on that, Matthew. I mean, this country has a great future. It has a great present also, but we make the right policies for it and get it going.
Yeah.
We'll be unbeatable. We'll be unbeatable.
Thank you for that. So there you go, everybody. That's Dinesh Achria. Find him on LinkedIn, and you'll find our episodes on YouTube and LinkedIn. Another episode of Beyond the Breakpoint with Dinesh Achria. Great having you here, Dinesh.
Thank you, Matthew. You have a great time, and we'll talk soon.
Absolutely.
I'll see you soon.
Cheers.
Cheers. Bye.